Morning, everybody. So I've done extensive research this morning on business line of credit. This is another form of leveraging. We talked about how you can use personal loans for leveraging, and you could use home equity for leveraging rather than liquidating assets. So if you have the recommended $100,000 investment portfolio built, which takes considerable time and effort, you don't want to have to sell your stocks when situations arise and you need cash. Everybody needs cash, right? But you have equity. I mean, you have assets that are worth something, and you could easily convert a portion of your portfolio to cash and then go pay your business expense. Let's give you an example. Let's say you need an in-frame overhaul. That typically costs anywhere from $20,000 to $30,000. Probably not going to put that on your credit card. And yeah, you could go get a personal loan. You may want to do that. Oftentimes, the repair shops have lenders available. These are predatory loans with interest rates of upwards of 30% interest rates. So this is where drivers or owner-operators get themselves in trouble when they borrow money, is they fall victim to these predatory loans. Another predatory loan is an APU loan. That's very predatory as well. It's something where, okay, you have a home. Okay, you could take out a home equity loan, get your overhaul done. You could take out a personal loan, get your overhaul done. You could liquidate some of your stocks, your assets in your portfolio, get your overhaul done. However, would a business line of credit fill this need better? So let me give you a couple examples. I have a Navy Federal Credit Union business card with a $25,000 limit. I also have an American Express Plum business card with no limit. I mean, the more you spend on that, and the more you pay it off, the higher your limit goes. So I think I'm in excess of over $25,000 available to me on that card. Now I have zero balances on both these cards, and I would not necessarily be too enthusiastic about using one of these cards for a major truck repair. I wouldn't be enthusiastic about selling some of my assets in my investment portfolio to liquefy some of that for cash, because then you're going to miss out on the compound interest that you would get on those assets. And if you use a home equity line of credit or home equity loan, then you're putting your house in jeopardy. For whatever reason, say the trucking industry bottoms out, you're not able to pay, for your truck or your house, so you're kind of putting your house in a line of fire. So it's like, well, is there another solution out there that meets these needs for this what if scenario? And I think the answer is yes. It's a business line of credit. That could be the solution. And you got to be careful when you do these things, because you could easily get over leveraged. Over leveraged is when you don't have enough assets to cover your debt. Many truckers fall into this trap. They're so far over their head, they're underwater. They're underwater on their truck. They're underwater in their finances in whole. And I've seen examples of what they call gap insurance. gap insurance is like, for just briefly, it's like when you get a truck loan. From my understanding, you get a truck loan, and you don't have a big down payment. You have to buy gap insurance. I would compare it to like when you have a house. Sometimes you have to carry mortgage insurance. Especially if you have a low down payment. That's kind of like gap insurance. So what happens is that if a driver can't make his truck payment and he goes to sell his truck, well, his truck isn't worth as much as he owes. He's upside down on the truck. He's upside down on that loan. So he has gap insurance to cover that difference. That's my understanding of gap insurance. Well, these situations do happen to truck drivers where they can't afford, to pay the money that they borrowed. They're over leveraged. So that's something to keep in mind. Now, a business line of credit could be appealing to you if your business is strong. If your credit is really, really good, like mine's over 800. You've been in business for a long period of time. I've been in business for 10 years now. It could be a very useful tool, but you probably would use it sparingly because you are going to pay interest on that. It wouldn't be your first choice. For me, like say I had a $10,000 truck repair. My first choice would be to put that on my American Express Plum business card because that gives me 60 days to pay with no interest. And I could probably pay that off in 60 days. Okay? But let's say it's more than $10,000. I would hope it's under warranty, but let's say, for example, it's not under warranty. If it's more than $10,000, I would have to, at this point, I would have to either deplete my savings. I normally have operating cash flow between 10 and 20,000. I might be able to pay cash for it. But I may not, depending on what's going on with the business, what's going on throughout the course of the year. Then I would have to go to my investment portfolio, liquidate some of my assets to pay for that truck repair. Well, a better way to go could be a business line of credit. It would be cheaper to do that than to put it on a credit card. So it's another arrow in the quiver of weapons you can throw at it. It's another resource. It's like I don't know how often I would use it, but it would be there in case I ever did need it. It's kind of like one of those things like planning ahead. Do I need it today? No. Would I need it a year from now? Well, maybe. So you don't want to apply for it when you need it. You want to kind of have it already, ready to go at a moment's notice. That's the idea with the business line of credit is it's always available to you. You don't pay interest on anything unless you borrow. There may be an annual fee of a few $100s, but you're getting the convenience of having cash available to you at your fingertips. And then you repay it. Let's say, for example, you have a $25,000 business line of credit. All right. And your cash flow is a little lower than usual. And then you're hit with a $15,000 truck repair. Maybe, or let's say it's $20,000 truck repair. So one box. You need a new one box. I've had to do this before. Buy a new one box. And not under warranty. You could use your business line of credit for that and then make monthly payments. You pay it back, and then your business line of credit goes, all the way back up to its full value. So you draw down and then you repay with interest. And all this interest is going to be tax deductible. So it's strategy. That's really what it is. It's all about strategy. What's your strategy? You're going to use your business credit cards. You're going to use your cash on hand. You're going to dip into your investment portfolio. You're going to take out a personal loan. You're going to do a home equity loan. You have a home equity line of credit. How are you going to pay for this? Well, another tool available to you is a business line of credit. And it may be the best tool at the right time. You know, it's like sometimes you use the credit card, sometimes you pay cash. Sometimes maybe the best tool you have in your toolbox is that business line of credit. So it's something that you want to at least be aware of, give some thought to. And maybe this is a way that you make your business stronger and more robust, that you're not a one-trick pony. You know, it's like you have one credit card and you're running your business. What if that credit card's declined? They don't, you know, some of these shops, you know, you travel across the country, they don't accept American Express. If that's your only credit card, you're screwed. That's why I have two. I have the Navy Federal Business Credit Card, which is Visa, and then the American Express Plum Card, which is American Express. Either or, you know, whichever one the shop takes. But if you had the business line of credit, let's say you had a business line of credit of $50,000. Could you find a useful way for that in your business? I would say, yeah. You know, let's just say you want to buy, you know, tires. Tires could be several $1,000s. And you don't want to put it on your credit card. You want to pay it off monthly over the course of the year. And you're okay with it, put it on your business line of credit. That'd be great. You know, and you're building credit. You're building business credit. Just like your truck loan's building business credit. You're going to have a business line of credit. That's going to build credit. So it's something to give some thought to. I haven't used it to this point, and I've been in business for 10 years. I haven't used it yet, but, you know, I'm fine-tuning a lot of things, dotting all the I's, crossing all the T's, and looking for opportunities or missed opportunities. This might have been a missed opportunity. So it's something I'm revisiting, and I'm saying, hey, you know, if I had this in years past, that would have been great, because I wouldn't have worried about paying for a lot of things. But I didn't have it, and I sweated it out. So going forward, it might be nice to have. All right, guys, that's all I got for you. Thanks for watching. We'll see you on the internet.